All right, now let's move to China and some very mixed data on trade. Exports falling there by more than 6% year over year in October, which was more than expected. But China's imports rose by 3% versus the period a year ago. This comes as China's President Xi is expected to meet with President Biden in San Francisco next week. Here with more on that and the state of China's economy is Shaun Rein, Managing Director of China Market Research Group. He joins us from China. Shaun, always good to see you. I want to get to the export and import numbers in just a minute, but I want to go broader and more macro. You think that the economy is going to beat expectations in 2024 with a 5% or greater growth rate in China, going to beat this year 5.3, 5.4%. But you also say that wealthy consumer confidence is dying and real estate is collapsing. If those two things are true, how can you be confident that the economy is going to grow at the rate you say it is?
It's great to be here, Ty. Yeah, it's sort of a mixed bag in China right now economically, and investors need to be very cautious. So the economy is bad still. It's bad since we spoke last June, but it's not as bad as people think. Importantly, what we're starting to see is multinationals are starting to invest in China again. I just met with a iconic German brand, and they told me, Shaun, 2023, we did not invest in China. We invested in India, but 2024 is the name of China. And the reason is because we don't think we're going to be able to see the growth in India, in Vietnam, in the United States, or anywhere that we can get into China. So I'm cautiously optimistic for 2024, Ty, because in the last 4 to 6 weeks, I'm seeing more and more multinational companies are planning to invest in China in 2024, I think defying a lot of market expectations. And that's off of a really bad year where FDI has already dropped 8% this year. That's why I'm cautiously optimistic.
Well, that's what I'm curious about. If FDI is off 8% this year and you say, or my notes report that you say, that multinationals are scared of China, worrying about getting arrested or complaining about difficulty in getting visas, how do you think multinationals are going to be a comeback story in 2024?
Yeah, so what's happened is when I talk with multinationals over the last 2 months, a lot are scared to actually come to China. I was supposed to kick off a meeting with one of my clients in December who canceled coming into China because they're scared about being arrested or they're scared about being able to secure a visa. I think there's a lot of sensationalism. The Wall Street Journal has misreported that foreign executives are being arbitrarily detained. China's really safe. Let me be really clear, Ty. It's safer to walk the street of Beijing or Shanghai at night than it is New York City or San Francisco. So fears of people coming are sensationalized, but they're still there. But that's more from the American side. So when you talk to the Europeans, you talk to the South Koreans, you talk to the Japanese multinationals, they're planning to make a big comeback into China investing in 2024. But it's the American companies that are shying because of the U.S.-China political tension, which is just getting worse and worse. As you and I have talked about, the Chinese feel that Biden is looking to contain China's economic growth. We've seen in the last 2-3 weeks, Biden has implemented more sanctions and more limits on American investment into China's technology sector and venture capital, and is preventing technology companies like Intel or NVIDIA from selling their top chips into the China market. So it's kind of a mixed bag. On the one hand, multinationals are coming back into the China, but on the other hand, there's still a lot of fears, and that's why real estate is bad, and that's why wealthy consumer income is dropping, and their confidence is really bad. So I expect, in the next couple of weeks, the sales of Gucci, Louis Vuitton, Porsche, the companies that are selling to China's wealthy are going to hit a wall. And so investors need to be very cautious about that. Very mixed bag. It's not easy to forecast what's happening right now.